All right, guys, welcome to October 19th pre-recorded Zoom. All right, so first things first, right, I'm gonna look at last week's weekly. In last week's weekly, right, although was relatively bearish, right, we are still technically bullish from a medium-term perspective, and let me explain why. Coming down into our daily, as you can see, right, the final push to the upside has been bullish, meaning we are still bullish. So even though, right, if we dive in internally, right, and we see lower high, lower high, lower high, lower high, the first lower high has been taken, right? This is not a sign of reversal. It's a sign that the range has been solidified in terms of low to high because we are still bullish, right? With our objective, although we have not met, right, the previous high that we had mentioned before, our overall structural range high, it is still very possible, especially with today's reaction, right? Because we had acknowledged last week, right, that something could happen when we came into the daily inefficiency and we start seeing a potential transition. So as you can see, based off of today alone, right, we came into our POI and we've already given a relatively strong reaction to the upside, right? Whereas the transition occurred, right, once preliminary structure high 1 and 2 were taken out, right? This solidifies the low, right? So technically, although this is considered picking a high down here, it only makes sense to want to take a position, right, in terms of a discount here off of a turbulence point, because this area, right, generated the final push to the upside. And as you can see, right, there is pretty much structured here, then there isn't a release to the upside. So technically we are bullish for the meantime, but it's going to be very crucial, right, how we react, right, internally now, right, in terms of, right, our preliminary range high. So we are approaching, right, a relative area of interest. So whatever happens here is pretty much going to dictate whether this is going to be the sign of our intraday reversal into our continuation of, right, the overall leg that we had just referenced, or it's going to be a continuation to the downside because of our intraday momentum, right, that is already present, based on the bearish order flow, the bearish continuations. So when you reflect that on EU, right, it's a bit confusing because, right, from just even looking at our intraday time frames, we know that we are bullish in terms of our pullback, and our next relative area of interest is technically an H4 POI for the continuation to the upside, right? But this can be easily invalidated because we are originally bearish, right? We were originally bearish, right? And when we were referencing even our daily time frame, right, our previous target for the bearish side has now given us, essentially a retest of our previous structure. Not only that, but we've also seen, right, a daily inefficiency be met here. Right, daily inefficiency has been met, right, and even the transition has occurred. Unfortunately for me, I wanted a bit higher on the retracement, because after I saw this move to the downside, I saw that obviously our final push to the upside has been taken out. So I know that we are transitioning into a bearish perspective. So I knew that I wanted this right here. And unfortunately, I just never got it. From a reaction perspective, right, if you're only studying reactions, right, then there's a very clear sign here where internally we have to be bullish in terms of the pullback, right? And the bullishness starts basically here. So we see, right, a potential continuation here, right? So the only reason why I didn't want to risk anywhere here was because I knew that intermediate and my short-term bias is still bullish because I wanted a higher POI, which unfortunately I just never got. So it's just now a very conflicting matter, just because right, we could now be looking at potential bullishness in probably tomorrow, if I'm being honest, just based on the distance here. It's not even 15 pips. So just depending on how we react here is going to definitely show us whether or not, you know, we're going to continue higher or we're going to start transitioning to the downside. And we're pretty much prepared for both perspectives, just because we know that we need a bullish transition here to be bullish, and we knew we need a potential, maybe even a bearish structural disruption to the downside to give us that bias into, you know, start achieving previous lows. But we are reacting from a daily inefficiency, so it really just depends on how bullish this daily closes. If this closes relatively how we are now, I could see, you know, like I said, that spike down and then give us, you know, more upside momentum. But if this miraculously gives you another 20 pips in the next 4 or 5 hours, then I don't see why this doesn't give you a bearish reversal. So it really just depends. Looking at GU, I haven't looked much at GU this week, but it does look like that bullish continuation is still going. Just based on where did Friday start? Right here. Yeah, the bullish continuation has, you know, just continued. Just because we had acknowledged last week, right, of obviously the internal order flow disruption, which led into the bullish continuation. So another bullish continuation just makes all the sense in the world. Nothing much there. In terms of AU, right, this has been the most bullish now ever since it transitioned. Although, right, we said that we would potentially be bearish, I'm sorry, based on a potential reaction here, but we reviewed on Friday why that did not, you know, occur as is, and why it didn't make sense to take any risk from there from a reaction perspective. So based on that, we know that that is a failure to go to the downside, because it gave, you know, the opportunity, not the opportunity, but it gave the reaction to the downside, right, which gave it a willingness to want to go lower, but it inevitably failed, meaning the effort was not enough, which essentially transitions the bias to the upside. So, right, something that's cool to note as well there is just looking at this is the fact of the cause occurring here. Right, with the cause being a potential willingness to go lower, but inevitably failing, means that there's money somewhere in that transition, because there's technically, in theory, it's a reaccumulation, even if it doesn't match a schematic. But you know, we know that needs bearish volume in order to occur. So it's very interesting to note, right, that obviously price has to come and mitigate, you know, that bearish position because of the cause and what that has led to. So the effect of this cause being the sort of disruption, right, gives us, you know, a potential bearish mitigation point, which was, I believe, yesterday morning, and that has given, you know, a very strong move to the upside. But with that being said, I mean, it really just depends on how EU and AU EU and DXY are going to react from their POIs. I don't necessarily want to take this position without a bullish transition, just because I know that this can easily fail because of where we are reacting from a daily perspective. So it really just depends. We need more data. We need more confirmation to either determine whether we're going to continue to the upside or continue to the downside. But yeah, I mean, if we're just only going off the higher time frame bias currently, it really looks like we could transition down into, you know, a bearish move for the next week and a half again, just by basing it off of how momentum has been going and where we are reacting from today from a higher perspective. But yeah, with that being said, I'll see you guys on Friday.